Welcome to TradeTheNBA.com. This is John. This report is for the 12th of September, and the rally continues. We turned into GAM right here, the yellow candle. Not surprising, right over that previous algo level. So people will be wondering, where the reasoning and everything is. Just, positive extremes from way back here at the end of July, and we pretty much just filled it back in, got the turnaround, and we've been off to the races since. There's plenty of money out there. We're looking at the DOC with the cyan still riding above, and critically, if today continues as it is, we will have cyan under red, which is always buy. Always has been, always will be. We can see it from the last time that took place, which was right at the start of the last algo run. They got us all the positive extremes that told us where we would be coming back to. We actually followed through a little bit further than that, which not surprising. Caught some people off guard, and then they flip to go short, but then they're shorting at the end of the run, and that makes beautiful buy cover for the long side of it. And the logic, of course, that everyone is suggesting now is that the Fed is going to change their target for inflation. Right now it's at 2%, and they're just going to magically say, well, we're only looking for 4% inflation, therefore we don't need to tighten as much, and we can get back to quantitative easing relatively quickly and avoid any kind of major economic slowdown. So that's the theory. From an NQ standpoint, looking pretty identical to the ES, so that's very congruent. Nice when they're both in alignment like that, clean. Now, of course, what we're going to be watching will be now the white MBI and how and when the pivot of magenta lower begins, because that will be the first signs where we will start to get any kind of weakness. And if it does happen before we get back up to the highs, that's going to be lower peak, and potentially critical at this juncture too, because the shakeout needs to move positive and stay positive. Because if it starts to roll over in negative territory, then you can expect, like what we saw back over here, which is a much deeper uh, cave. Because once you get that momentum to a positive shakeout, it has to stay up there, or you start to really have it's just an indication of the dispersion that's going on. And so you would really be seeing underlying selling within what appears to be buying configuration. So we'll keep an eye out for it. From the euro standpoint, super rally pushing that euro all the way back up, almost back up to 102. That's a massive move. Everything in Europe has been solved, and they're looking good. Ukraine is about to win the war, and therefore life will return to normal. I'm not sure how that helps gas supplies, but somehow it does, and we should just accept that. From a gold standpoint, starting to eke back up, because obviously everybody thinks that we're going back into our normal cycle of all the supply disruptions, everything have been eradicated and solved, and therefore we will get back to normal. Because at the end of the day, there's some truth behind that. The reality of most of the inflation has been supply side restrictions and too many dollars to chase those limited supplies. When you get the supply chain moving again, yes, then you won't have that inflationary pressure. Oil still excessively high, though. I mean, this is ridiculous, more than double what it really should be, which is significant. When it was back down in the 40, upper 40, low 50 range, certainly put a lot less pressure on households. It's not going to be as big a deal for the U.S. as it will be in Europe here when it comes to winter and fuel issues. And of course, I've been talking about TLT continuous breakdown, and that it should go down as yields rise. It becomes a fluctuation just of market dynamics, people coming in and out of the market looking for safety and security, represented here by ETF. Always a nice way to play treasuries through an ETF. I've always thought it's just so much easier. From a Bitcoin standpoint, it's also had its turnaround too. We caught that one as it was happening from an intraday standpoint. Starting at positive extreme though. Not a big deal. It's just the beginning of the positive extreme. So that's the cursor that will return price to, which, what is that? Roughly 21.5 range. Not bad. And from an ETH standpoint, also looking good from its daily, trying to get back up to its post crypto winter highs, if you want to refer to it that way, as we go into winter, which is ironic. Yes, from a 50K standpoint, bought the turnaround move and continuing to look for that rise. And from a 50K standpoint, looking strong. If that magenta closes back up above there, that would certainly potentially cause a turnaround in the blue. If we start to get a little back and forth right here, then that would be more of an issue. But we're not too concerned because why? Well, cyan under red DOC, which is always a buy. Just thought I'd throw that one out there in case anyone had forgotten. I don't know what happened to my 5K chart and the scaling of it. It should be more towards the middle, but that's all right. It'll correct itself. I probably would just recopy and make a new one. But um, for the most part, there wasn't a whole lot to do. I mean, we were up. We had a couple of little signals that came later as the shakeout started to drop. So, second shakeout reading, it got close to the matching highs of the previous one, just slightly below, but higher price on matching to lower shakeout. That's a divergence that I'm always looking for a sell signal under. And when it came, it took a long time, but it finally, with the MBI white leads, did get back to zero. And then quick turnaround, and that led to a nice move all the way back up. So it was just getting beautiful ranges. It wasn't anything that looks dramatic, but I mean, point move wise, I think it was still significant enough to really be a very fun trade overall. We had a couple of, I don't want to call it false signals, but ones that just don't produce much. They just wear out. And what happened here is you had the DOC spread start to move and everything's looking good, and then you get the magenta move back up, and bar later you get the major dip of orange, and that's pretty much it. And that just brought it back. Now, fine, it was just an interlude, and as I've pointed out before, the upside risk on typically most of those is about 8 points. This was 84. Where did the high go to? 93. So yeah, pretty straightforward. And then it went right back down and filled it all the way back to the algo level. And then, of course, post market right here, early part of trading for Monday's action, already filled back all the way to that algo level and bouncing. So now we're between those other two previous ones, which was the 4103, 4080 range. So comfortable right in there. And of course, we'll have lot more activity going because we'll have option expiration, the contract rollover, that kind of typical activity. And of course, everyone will be hinged upon any of the latest economic data to just further confirm that upward bias. And as long as it keeps with that, there shouldn't be any issues. If there's divergence, we're going to see it, or if anyone has an inkling of it. For now, we're not getting that in any of the readings. So we'll stay with what is. As always, though, trade well. Look for me on the Skype chat. We'll talk to you later.